A three-digit number dictates what you pay for a home or a car, yet few people are taught the actual logic behind it. We are going to change that. Right now, we are building a fully automated system to maximize your credit score and accelerate your debt payoff. To begin, gather two items. Open your banking app on your phone and have your most recent credit card statement ready. By following these steps in real time, you move past treating credit as a passive metric and start running it as a controlled system. Step 1. Locate the free credit score tracker within your banking app and tap it. Checking this number does not lower it. This is a soft inquiry, which has zero impact on your file. Only a hard inquiry, when a lender pulls your report for a new loan, causes a temporary dip. Now that you see your score, we need to address a common myth. If you are intentionally carrying a balance to build credit, you are operating on false information. Your card reports your behavior whether you carry a balance or not. Paying your statement in full every month builds the exact same history while costing you zero interest. Carrying a balance adds nothing to your score. It simply functions as a voluntary interest payment directly to the bank. The fastest lever for improving a score is your utilization ratio. This is the percentage of your total available credit you are using, and the goal is to keep it under 10%. Open your bill and find the statement closing date. This is distinct from your payment due date. Banks typically report the balance you have on the closing date. If you pay that balance down a few days before the statement closes, the bank reports a lower number to the credit bureaus. Next, go into your app and find the option to request a credit limit increase. This math illustrates the effect. If your limit rises from $1,000 to $5,000, but your spending stays at $500, your utilization drops from 50% to 10% instantly. These timing and limit adjustments change how lenders perceive your risk without requiring you to spend a single penny less. Look through your accounts and identify the oldest credit card you currently have open. Never close this card. It removes the oldest portion of your history, shortening your average credit age. Closing it also removes that limit from your total pool, causing utilization across remaining accounts to spike. Two negative impacts from one decision. Instead, put one small subscription on this old card and set it to auto-pay the full statement balance every month. Think of this card as fine wine. It supports your total score simply by existing and aging in the background. For those with debt, the primary obstacle is the minimum payment. These amounts are calculated to cover interest while barely reducing the principal, which extends a moderate balance for years. Go to your payment settings and replace the minimum due with a custom fixed amount. You can allocate this payment using the avalanche method, paying off the highest interest rate first to mathematically save the most. Alternatively, the snowball method targets the smallest balance first, providing frequent wins to maintain your momentum. The best strategy is the one you will still be using 6 months from now. Consistency in the plan is more important than perfect mathematical optimization. While executing this plan, avoid cash advances. Because they incur immediate fees and have no interest-free grace period, they are significantly more expensive than standard credit card use. A fixed payment plan removes the compounding power of the bank and gives your debt a specific end date. You have protected your oldest history, optimized your utilization, and established a strategic debt payoff. Take a screenshot of these 6 rules. Automate your payments, keep utilization under 10%, keep old accounts active, check your score regularly, apply for new credit sparingly, and pay fixed amounts on debt. If you follow these steps, your credit score becomes predictable and quiet, which is exactly what a healthy financial system should be. Which of those myths were you following? Let me know the number in the comments. Subscribe for the next video, where we build the system for the money you keep.